Al, we talk a lot about the smart money. We know that's the institutions, the banks, the big money players, right? Now they have the proper mindset. You were talking about that earlier, and they are always creating income. And I kind of ended the last segment about there's techniques and strategies that they're using that the public doesn't know about. Well, the good thing is these techniques and strategies, the public can also apply.
Right.
And you want to apply that with how the markets really work with supply and demand. So let's talk about some of that mindset that they're using, continue that discussion, but how supply and demand really works in the financial markets.
Okay. Well, yeah, as far as the mindset, I mentioned that you have to accept the fact that markets go different directions and there are strategies for all three directions. Also accept the fact that you are not going to be right 100% of the time. And the pros, the smart money knows that. And they just simply manage their winners and their losers. You don't just put money into something and then let it ride without being proactive. Your goal is to maximize your returns and minimize your risk. That should be the goal of any trader and investor. You need to be proactive to do that. And then also the smart money, the pros have an edge. They develop an edge. That's what each investor and trader should do. That's what's going to help you increase your probabilities of being right, increase your profit potential. Basically, what we want you to do as one of our students is think, act, and execute like the pros. Do all the things that they're doing. Just basically copy and follow them. And the important things are really two things that are key to having the opportunity to be successful in any trade or investment. One is identifying where price turns, in other words, where maybe the start of a new trend will begin, and then also how far it's going to go. That is the profit. And that should be really the key is identifying a profit potential that, kind of fits your goals and your expectations. And what we find is that where price turns, in every market, price is going to turn at a level where supply and demand is out of balance. You mentioned that those words, supply and demand. That's basically buyers and sellers. But it needs to happen with such high volume that it can actually move the market. That's not you and me individually or any individual other than maybe someone like Warren Buffett doing it, but it's the big institutions like Goldman Sachs or JP Morgan. They may be buying millions of shares of something when they take a position. And so that is what is going to cause a turn in price. The key is to be able to identify where at least part of that trade is going to take place in the future. It's identifying orders that haven't been filled yet that are soon going to be filled. That's what our core strategy, our foundational strategy shows our students. And then the other thing is, how far is it going to go? How far will price go in the right direction for you until it stops and reverses? That is part of what a strategy should provide for you. Again, it's if you are going long, if you're buying something, what you want to be able to identify is where the sellers are, because that's when it's going to stop going up. When there are enough sellers in a certain price range, that's where a target should be put if you're long in a position. That's how you determine what kind of profit potential there is. And one of the fallacies that people need to overcome is that you don't need to be an expert or use one to do this. And you don't have to be right every time. You just have to understand how the markets function and just how you're able to follow the people that have already got this figured out. Those are the big players. That's the smart money.
You're right. And the key there is having a proper strategy. So many people get in the markets without a strategy. So you want to learn that strategy and apply it with low risk, high reward, high probability entry points into these financial markets. Al was talking about turns in price, where you find those low risk opportunities. And when you do that, that strategy can help you with the confidence. The smart money is not just using the stock market. Let's talk about those other assets.
Sure.
We have futures and we have Forex. There's a couple great things or great opportunities that the public is really missing out on with those assets because they just don't know what they are. Explain that.
Right. Yeah. You mentioned futures and Forex. There's also options. Those are assets that the smart money is using, the pros are using on a regular basis, yet they're putting their clients, if it happens to be a financial institution, into something different. Typically, it's mutual funds or some kind of an organized portfolio, where they're basically just collecting a fee. Yet they're active. They're active pretty much on a daily basis, which doesn't mean you have to be. You choose the amount of time that you want to put into any kind of trade or investment. But the key is to Again, identify where they're trading. That's the key. That's where you're going to identify the proper entry point and then the proper target potential. You had mentioned before a quality trade. That is where you also have the highest probability of it succeeding, and those always seem to take place where there's a turn in price. And again, that's what our core strategy helps you to determine. We look at financial education as a pathway, really, to a desired result. And we're basically, with our students, going to hold your hand and take you down that pathway, which is a step-by-step process. Each step it's a set of rules, really, that you're following. And by following those rules, and as much as possible taking the emotion out of trading, you've removed the number one enemy to any individual, and that's yourself. That's what's between your ears.
Yeah. So you want the proper pathway. What are some of those assets that may fill that pathway?
Yeah. If you're looking for, we look at kind of dividing your financial life into two components, two buckets, we call them. One's an income bucket and one's your wealth bucket. That income bucket, that is kind of what you're doing as you're going through your accumulation phase while you're still working. And typically that bucket is filled from your job, income from your job. That's where your bills are paid, where you have some fun, hopefully. That's where really the cost of staying alive is taken care of. That income bucket has to be large enough where there's an overflow, because the wealth bucket, what you're going to rely on when you retire, has to come from that income bucket. So for a lot of people that are listening to this show and a lot of our students, the reason that they have come into the academy is to learn how to better take advantage of what can go into that income bucket. If your job isn't enough, or if maybe your job's enough, but you want a little bit more, some of these assets that we're talking about, you mentioned futures, Forex, and I mentioned options, those can be used to generate additional cash.
Well, remember, they're designed because of the different opportunities. They're designed to do that.
That is correct. That's exactly what they're designed to do, and that's exactly why the institutions take advantage of them, because they know there are opportunities every day out there that they can take advantage of. And again, that doesn't mean that you have to be doing this every day, because the opportunities are they're frequently. The key is to be prepared to take advantage of the opportunities. The futures and Forex are great assets for trading short-term. Forex can also be used a little longer term, and even in retirement accounts. Futures is a great short-term asset. And what I mean by that is it's something you can get into and out of on a short-term basis. It's not like the typical portfolio that Wall Street would put together for their clients, which is a long-term buy and hold strategy.
Buy and snooze.
Buy and snooze, buy and forget, buy and hope, buy and pray, a lot of different numbers there. But people think, yeah, all I need to do is put this portfolio together, just hold on to it for years and I'll be fine. And you probably over the course of 10 or 20 or 30 or 40 years will be okay. But what's okay? Maybe okay isn't enough for you.
It's all relative.
It's all relative. And there are opportunities to really boost that long-term portfolio, and there's the opportunities to generate cash on a short-term basis. If there are needs you have that have to be covered financially now, you can't wait 10 or 20 or 30 years to cover them. You have to have access to something now. That's why these short-term assets are so valuable. And to be honest with you, when you go into retirement, you need to be generating some cash there too. So these short-term income strategies are not only useful now, but also down the road when you retire.
That's why those institutions use them, because they're designed to do that stuff. You have to learn how to do it first. So what I was talking about is, don't just go do this on your own. Learn how to do it properly to build that confidence and better decisions there.
Right. There are two things that are available to everybody. One is access to the markets, and the other is access to education. And the last thing you want to do is to combine the access to the market with the education that the market's going to provide for you, because that's not going to be a fun situation to go through. The proper education is there. That should be the first thing you do. Then look at the opportunities that are available in the market using the right strategy for you. Everybody's going to be different. So whatever you do should be customized in a plan that is developed for you specifically.
And just think about that too. I mean, everything that we do in life, we want to learn how to do it first. We don't just want to jump in head first. That's why education is so important. And, with these other markets, the futures market and the Forex market, phenomenal opportunities. Why? Because they're open 24 hours a day. You have leverage or buying power. So people that there may be people that are listening that work during the day. Well, these markets are actually open in the evenings. So people that don't think that they can participate, they're missing out on opportunities at night.
Correct.
What's one of those things that people like to do at night? Some people like to watch Netflix. Some people like to learn and like to do other things to, I guess, enrich their lives. And that's what it's about is enriching your lives to have more confidence into what you're doing.
Yep.
And Al, you talk more about these in these assets, futures and Forex. Why, times of day that you would trade them. Say you like to get up in the morning and trade the morning. Maybe you like to trade the evening after work, as Al was talking about. They're open during that time. They also have the buying power, which basically means the basic definition is that you can take a smaller amount of capital to control a much larger asset. It's capital efficiency is what that is. Al, that hot topic coming up next, retirement. We're going to talk about techniques and strategies for 401ks and IRAs. We will be right back.